The FTSE 100 is trading at an 11-month high as it welcomes the prospect of a new Prime Minister and maybe some political stability, as Theresa May replaces David Cameron in 10 Downing Street. However, history suggests it may take more than a new Prime Minister to really get the stock market going. Hello, I'm Russ Mould, AJ Bell's Investment Director, and I'm going to quickly look at how the UK stock market has performed when a Prime Minister has taken office midway through a Parliament. Now, since the inception of the FTSE All-Share in 1964, this has happened 3 times. James Callaghan and Gordon Brown stepped in for Labour in 1976 and 2007, following the departure of Harold Wilson and Tony Blair, while Margaret Thatcher was replaced by John Major for the Conservatives in 1990. The chart behind me shows how the FTSE All-Share performed in the 12, 6 and 3 months before the new PM took office, and then the 3, 6 and 12 months after they took charge, as well as how the index did over their full term. So the first line we see here is for Jim Callaghan, second for John Major, third for Gordon Brown. Now the next chart shows the averages for each of those time periods. And as you can see, on average, the FTSE All-Share came in exactly flat over their first year in office, despite the wide range. Now we all know there's no guarantee history will repeat itself, and when again we can see from the first chart that very wide range, because all 3 took over under different circumstances. Stagflation under Callaghan, recession under Major, and a galloping boom that was about to crash under Brown. This makes it clear that while political stability is certainly welcome, there are many other factors at work when it comes to how the stock market performs. The economy is one, but ultimately it is corporate profits and cash flows, and the price, valuation investors are prepared to pay to access them, that really dictate how the FTSE All-Share will perform. With a dividend yield of around 4%, the FTSE All-Share can therefore be seen as a 25-year duration bond, as that's how long it would take investors to get their money back, assuming no change in dividends or share prices. That time frame shows exactly why investors should treat shares as a very long-term investment, and why the role of short-term politics shouldn't be overemphasised, as very few Prime Ministers even last for much more than 1 term in office anyway, or that's certainly been the case since the All-Share began trading in 1964. Punting the market on the back of politics will incur unwelcome fees and friction in dealing costs that can erode portfolio returns. In addition, you should also make sure that you do your research and ensure that any selected stock, bond, fund fits with your overall strategy, target returns, time horizon and appetite for risk before you make any investment and put capital at risk. So thank you for watching, and I look forward to seeing you next time.